Good morning, traders. It is 8:01 a.m. Chicago time on the 22nd of March, 2016. It's a Tuesday. This is another Trader Bite early nourishment for your trading mind. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. The overall market posture um, or sentiment for the overnight session with oil being down slightly. Oil down about 0.72% or 30 cents at 41.23 currently. Gold being up at the top of my list, up 0.72% or $9 at 12.53, 10 cents. Treasury futures, the bonds are up, 10s are slightly up. The Bund is flat. Believe it or not, it is completely flat right now at 162.42. And the Asian markets, the Nikkei is up fairly strong, Hang Seng flat, Shanghai slightly down. The Japanese yen futures are slightly up. Eurozone equities, the DAX slightly down, but I want to make a note here. The DAX was down. The DAX is currently trading at 99.44.5 on the futures, and it was down as much as 97.91. 97.91, currently 99.45. A very, very big reaction there and a rebound on the Belgian news. The FTSE slightly down and the CAC 40 slightly down. The U.S. markets with the S&P 500 is down 0.4% or 8 points currently on the futures, and the U.S. dollar slightly up. That combination gives us another day of a market that is in a risk-off stance. The market is tentative because of geopolitical news, and over the last couple of days, last couple of sessions, the market has started off in a tentative mode and has generally found buyers and continued to push higher. So overall, um, it's the sentiment's not being carried through into the next session. The key driver, of course, in the overnight is the explosion in Brussels. I believe 28 have it's claimed 28 lives, I believe, if I'm not mistaken. And that's a news story that we continue to follow. The German business confidence bounced back. The IFO Business Climate Survey gained for the first time in 4 months, climbing 106.7 from 105.7. And UK inflation has held steady. So overall, the market's primed to do something. We're here to try to figure out what is the most probable play and to take advantage of it. I did not prepare yesterday's video for a replay. Let me do that real quick. This should take a second, and we can go over our hypotheses. Here we go. Let's move forward to our hypotheses here. Sorry about this. I felt like I was forgetting something, and this was it. I'd like to review what we expect. So here's the primary hypothesis right here. Switch this to 1080 for clarity. Should get much more crisp here in a second. There it is. So that was the primary hypothesis. The primary hypothesis is that we were opening just inside of the range, just out of the value during the trader bite. The expectation is we were likely to push up into the 2040 75 area, which is a value high, and then we're looking for a rotation down and a push through the overnight low is where we expected the break, and then the target would be 2026 on the session. That was the primary hypothesis. So a push up to VPOC value high area, rotate down, break the low, and start moving towards 2026. That's what was expected yesterday. That was the primary hypothesis. The secondary hypothesis, let's see if we can find it. The secondary hypothesis was this. The secondary hypothesis pushed to the 2040, chop around um, because of the point of control there, pull back and then continue higher, take out that 2044 quarter overnight high and close the gap at 45.75, and that's what we're looking for on hypo 2. Now let's look at how things actually played out. So here we are. This is the 15-minute. We opened in range, just out of value. Let's change the color here to something a little brighter. In range, out of value, and we pushed right through the 2040 and into the value high. We pushed through the value high up to 41 and a quarter. We put in a triple top on the 15-minute. You can see the multiple tops there, and then we came back and revisited and failed it by a tick. This I'll talk about this in a second. This set us up for a really decent play to the long side, but initially it pushed through that the point of control by about 5 ticks, and it pushed through value high by about 2 ticks, and then we got the rotation down. So far so good for hypo 1, and the idea is that we break through the prior day's low, which was 33, and where did we go? We went to 32.75. This was a 1-tick failed auction. This is a classic 1-tick failed auction. You can see the dry up in the volume as we push through the overnight low, the prior day's low, and overall, this reveals that there was nothing triggered on the sell side towards the 32 quarter point of control from Thursday, and there's no continuation. As soon as it blasted through the mid here, we were back on our heels instead of staying on our toes and aggressive on hypo 1. This puts us in neutral territory for the session. So far, hypo 1 was working out beautifully with a nice big drop off of the 41 and a quarter. If you took it at 40, that basically gave you about 7.5 points of range to play with. And then as soon as it did the 1-tick test and a blast off to the other side, we were basically in standby mode. The 41 and a quarter looks, it's 1 tick short of 41.50. Keeps calling this 41 and a quarter, but it's 41.50. It's a tick short of 41.50, but this still qualifies as another top. So on the pullback, this is considered a big double top. But since my criteria for the double top, double IB high, double IB low stat, my criteria is a 15-minute gap between tops, which has already occurred right there at this bar, and this basically makes it a triple top. So a triple top setup is a pullback to mid. The mid is right here at 37 and a quarter, and it pushed to 36 and a quarter with giving us about 4 ticks of heat, and then we're looking for this top to break with an 82% probability. Again, as always, with statistics, past performance is not indicative of future results, but we expect at least a 1-tick break of 41.50 after the pullback. So from this 37 quarter to 41.50, we had a 4-point rotation, and then it actually tested the prior day's high by a tick initially. This almost looked like another failed auction to the high side, but overall we have a neutral day. We've taken out the IB low, we've taken out the IB high. The expectation is the market's likely to close somewhere in the middle with a higher probability than closing on an extreme. Neutral extreme is not as common as neutral normal. And so for the rest of the session, it just creeps up, pulls back, and then we get a small spurt of buying on the close. You can see that the delta here is supporting the buyers, with the point of control shifting from way down here all the way up to where it ended up on the session at 2042. is where the point of control is. So this was an outside day. This was an engulfing day. It took out the prior day's low and high. The market's still in balance. We did shift the point of control higher as we did from the day before. So the point of control keeps moving higher. There is strength. And what we've been seeing fairly consistently is that the market, when it opens lower, it tends to shift up. I've been looking for a return and then a pop, a return and then a pop. And then in this situation, I was looking for 2026 because of where we are. We're against this high volume composite level, but it continues higher. And in the overnight session, so I'm just giving you the context here. Context is a small word that describes big things. The overnight session shows us just going sideways on the Asian session, and then the news out of Brussels came in at about 2 o'clock Central on my news feed. 2 o'clock Central, 2 a.m. Central, 3 a.m. Eastern, and that was basically when the European indices opened, and we took a dive from there. We had a this was news driven. The scene of the crime is up in the 2041 area. The rotation back up is 2040, never made it back to the scene of the crime, pretty close, and now it's shifting downwards. You can see the profile is almost a B-shaped profile, a long liquidation type profile. We shifted down quickly, and we've been balancing down below for most of the session, making this low fairly precarious right now. And so overall, yesterday's low at 2031 has been breached. We pushed the overnight low to 2028.75. I want to remind you 2026 is below that, and it is key. And it looks like we're not able to find the rotation up, even though we've had this news and it could continue. Multiple cells could be active and, acting together and blowing up things all over Europe. But the market's basically in neutral position here. The Bund is basically yawning this away, being flat still at the moment. It's up 3 ticks. And so overall, this looks very bearish coming into the open. However, the last few sessions have looked very bearish coming into the open, but we have had a tendency to test down and then immediately find buyers to push up. I'm not sure if this is the day where we make it back to 2026. We'll see how that works out. But overall, the overnight session looks heavy to the downside, and I'm going to be watching very carefully this 2036 area to determine whether or not we end up pushing back up. So 2036 right here is where the point of control was yesterday before it moved up. This is the line in the sand right now. As long as the market does not breach it, I'm looking to the downside, and I'm looking for 2026. So again, this is going to look like a replay of yesterday, but overall, we're opening out of range, completely out of value. Clearly, if we're out of range, we're opening out of range. We have a gap. Yesterday's close is up by 2042.50. We're at 2031. We're 11 points in a gap, and the market's starting to push lower now. The DAX is breaking lower right now. There it is. Like I said, it's pretty. It looks fairly heavy, and it looks like it's likely to break on the downside, and it's already doing that. So what is the primary hypothesis? Unfortunately, this has moved away. The primary hypothesis is I expect the market to open wherever it is. I guess we'll keep creeping. I expect it to test to the upside. I expect it to test to the upside. And then the probabilities are basically 50-50 for hypo 1 or hypo 2. Hypo 1 being a test, an attempt, and then a continuation lower, which is basically the same as hypo 1 yesterday. Hypo 2 is a test, pullback, push through, pull back to prior day's low, and then starting to work its way back to 2042 and into balance again, as we have been doing. I don't expect that there would be news that would negate the explosions in Belgium. I expect more and more news to come out with regards to how this terrorist cell has been operating and how much of a danger it is to Belgium and other European cities, countries. And so I don't expect the news to get any better as this incident here is investigated. So I'm looking to the downside. But once we get back into the range, if we're up here, once we exceed 2036, um, your probabilities are coin toss at that point. It could continue higher. It could bounce off a value low and rotate down. I suggest you just stand by and see which side has the bigger rotations. Rotations are very important, monitoring which rotations are expanding to which side. If we have been, as you see here, if we have been in 1.75 to 2-point rotations with 1.5 to 1.75 pullbacks, and then all of a sudden the market breaks lower and puts in a 4.5-point rotation, let's say, that's telling you something. So my approach is to wait for that rotation, not try to preempt that rotation. I'm not a bottom or top picker, and then look for the pullback for the continuation move. That's where the money is. I believe that's a lower risk trade than trying to figure out when that first break is going to happen. So I watch rotations very closely. I've done several talks about it already, and you can look that up on my website. So that's where we are. Hypo 1, open, test, try to breach, rotate down to 2026. That's the price I'm looking for still. That's the key price in the area. Hypo 2, open, attempt lower, maybe drive lower, chop, push up, pull back to the prior day's low, break this 36 and start walking its way back up to 2042. That's what Hypo 2 looks like. Be careful once the market breaks into the prior day's range. Just be careful. The odds become very, very even for both sides. You have a good case for sellers to step in and push it down. You have a good case for buyers to wait for pullbacks to push it into value and run it through the value range of yesterday. That's what I have for you. I hope. I know I'm throwing a lot of information at you, and I'm drawing a lot of things and all that. Just stick with it for a while. It starts to clarify itself. In my opinion, it'll start to get clearer and clearer how the auction works, and then you can apply your moving averages or indicators and stuff on top of what I'm doing, and you'll find that more likely than not, there is an edge there. Just hang in there. Try to understand the terms I'm using, and just apply, understand the auction itself, and then layer on top of it whatever it is you like to use and whatever it is you're comfortable with, floor pivots or fibs or indicators or so on. But understanding the context of what the auction is doing, because the market is purely and simply a price discovery mechanism. It's all it is. It's the market's job is to try to find is to do its best to find as many buyers and sellers and get them to trade as possible. That's why we create markets and malls and eBay and whatnot. We're trying to bring buyers and sellers together, and in bringing those participants together, we find the fair price, and we tend to trade a lot at the fair price, and that price is called the point of control. The market has a tendency to want to be in balance. So it spends a lot of its time in balance, and it trends approximately 18 to 22% of the time in the S&P. It's different for different products depending on the type of product there is. Anyway, I know it's a lot to digest. You might want to watch this again, but I wish you good luck today, and I'll catch you tomorrow morning. Take care.